the difference between an individual 401k and a solo 401k? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In today's video, I'm going to explain to you what a solo 401k is. Is it different than an individual 401k or a self-employed 401k? Well, tune in and you'll find out. A solo 401k or an individual 401k, guess what? They're really the same. There's actually no legal term. If you look at the tax code and open the code, you're not going to see the word individual 401k, self-employed 401k, solo 401k, self-directed 401k. They're not there. Section 401 is the primary tax provision that addresses 401k plans. And all a solo 401k or an individual 401k or a self-employed 401k or an IK or a UniK, all it means is it's a regular 401k that because you have no full-time employees other than the owners or their spouses, you're not subject to the ERISA 401k rules. Now, ERISA was created in 1974. It added a lot of rules and regulations to employee 401k plans. Those are employer plans that have multiple employees, non-owner, in order to protect the employees. Yes, ERISA also did invent IRAs, but from a 401k standpoint, it added a lot of administrative requirements to employers. Just want to make sure, obviously, that they're taking care of all their rank and file employees. That means if you have a 401k with employees, just like IRA Financial, we have to follow 5500, we have plan testing, we have to do a census, we have to make sure contributions are done timely, we have to offer the same benefits to all our employees. If you have a solo K, right, you're not going to sue yourself. It's just you or another owner or the spouses of the owner, so you don't have to worry about ERISA. And ERISA doesn't have to worry about you because there's no employees, non-owners to protect. So the solo K is advantageous because you can contribute a whole lot more than you could in a regular 401k because you have the employee deferrals plus you have profit sharing. Whereas if you work at Netflix or Twitter, you're really just going to have the employee deferral, which is the $20,500 or the $27,000 if you're over 50, and maybe you'll get a 3 or 5% match. Whereas in a solo K, you'll get that same number plus the 20 or 25% employer contribution, allowing you to get to the maximum amount of the $61,000 or the $67,500 if you're over 50. So all in all, it's the same thing. IK, solo plan, self-employed, individual 401k. It just means a 401k that's not subject to ERISA because you have no full-time employees that work more than 1,000 hours that are non-owners. Still the best plan for the self-employed, best plan for the small business, whether you call it solo plan, individual plan, self-employment plan, doesn't matter. It's all the same rich benefits that every small business owner with no full-time employees or any self-employed individual needs to strongly consider.